Now, there's absolutely no reason for me to sugarcoat this. When $100 per month invested into a high-quality dividend growth ETF like SCHD or others like VYM, DGRO, etc. are not going to turn you into a multi-millionaire per se. But in this video, I'm going to go through and show you the magic on how just $100 invested per month into a high-quality dividend growth style ETF like SCHD or others could potentially leave you with hundreds upon hundreds of thousands of dollars later on. Now, this is all because of one single metric that this ETF, along with a lot of others, have. So make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, like I sort of mentioned, for this video's example, we are going to be looking at my favorite dividend growth style ETF, SCHD. And we're going to be using this ETF specifically because it has a very large dividend growth rate, which is the metric we're talking about, and the magical metric on how an investor with a relatively small portfolio can turn it into a massive portfolio later on. But like I sort of mentioned, there's other high quality dividend growth style ETFs out there, things like VYM or even something like DGRO. There's countless high quality dividend growth style ETFs across the market these days. So don't get this confused and think to yourself, well, SCHD is the only one to buy, because that's of course not the case. Now, the idea of investing just $100 per month into something like SCHD, even for a relatively newer investor that doesn't have all that much money to spend on things like stocks or ETFs, is still a very realistic goal to get to, no matter what your current income situation is. And I wanted to make this video and show you guys the math behind just $100 per month over the long term, show you the actual power of compounding and how just $100 per month can potentially turn into hundreds of thousands, because maybe this is the video that's going to set off your motivation, and maybe this video might be the reason for you to set up a long-term portfolio like I did several years ago. But to go into the main reason on how a portfolio made up of something like SCHD, even a relatively small portfolio, to go into how this is even possible. How can a tiny portfolio of just $100 into SCHD consistently over the years turn into thousands upon thousands of dollars? Well, something like SCHD, for example, has a 3.45% trailing 12-month dividend growth rate. Now, that basically means for every single $100 that you invest into SCHD, you're going to earn around $3.50 or so on a yearly basis. But the real magic is here. I sort of hinted at it earlier. The real magic is this ETF's dividend growth rate. Now, SCHD specifically has a dividend growth rate over the last trailing 12 months of around 12%. Now, over the last 10 years, it's averaged out to around 11%. Now, this means at least over the last 13 or so years since SCHD has been trading, this ETF has paid investors consistently around 10 or 11% more in dividend income year after year after year. Now, this also means if around 10 years ago you owned a single share of SCHD, let's say, you would have earned around 8 cents per share per quarter. Now, if you just held onto that same exact share for 10 years, didn't touch it, didn't do anything with it, now that same exact share that used to pay you 8 cents per share per quarter is now paying you anywhere from 25 to 27 cents per share per quarter, or more or less tripling the amount of dividend income you're now receiving. So before we even go into the nitty gritty and look at the actual math here, you can start to get an idea on how even a relatively small amount of money into something like SCHD, whether it be 5 years, 10 years, 20 years, or for this video's example, 30 years invested, you can see how that could potentially turn a small amount of money into a massive amount. Now, the other important part for this entire objective here, to build a massive portfolio with just $100 invested into SCHD, we're going to be dripping the dividends over the years. Now, DRIP, or a dividend reinvestment plan, is basically when you allow dividends from a stock or from an ETF to basically drip and buy you more shares of it. It says right here in Investopedia, key takeaways. A dividend reinvestment plan, or DRIP, automatically uses the proceeds generated from dividend stocks or ETFs to purchase more shares of the company. It also says this strategy allows investors to compound their returns over time by accumulating more shares, which themselves pay dividends that will be reinvested. So just to sort of show you guys again how this is going to work, let's say you buy a share of SCHD at some point as of now in the future, or any other dividend growth ETF for that matter. And let's go back to the easy math example. If for every $100 you buy of SCHD, if you're getting paid around $3.50 as of today, which keep in mind, historically, you're going to be getting paid more next year. Now this means that $3.50 in dividends that you're going to receive on a yearly basis, that money is now going to be recycled back into more shares of SCHD, and now you're basically going to be gaining new shares, or in this case new fractional shares of SCHD in your long-term portfolio without even spending a single dollar of your own money. Now technically the dividends that are paid to you are of course your own money, but what I mean is that $3.50 that you're now earning per year for every single share of SCHD you have, you didn't have to go out and work to earn that $3.50. That was paid to you in the form of dividend income, which is now buying you another sliver of a share of this ETF, which of course is also going to pay you another sliver of a dividend. So by turning on DRIP and allowing the dividends to reinvest automatically over the years, that's a strategy that can have the potential to compound a portfolio significantly over time. But enough of all the math, let's go through a real life situation and see what things could look like over time. So for a tiny portfolio, this portfolio example is going to start with $1,000. And if you guys have watched my channel before, you know that a lot of times I'm talking about a $10,000 portfolio starting, or maybe a $50,000 portfolio. But for this video, I wanted to break it down and make it tiny, very, very small, because even those investors out there that don't have all that much cash balance to work with, that maybe aren't making enough as of right now with their day job, I still want to prove that this could potentially be a good option. So a $1,000 starting principal and a $1,200 annual contribution. That's $100 per month, not $100 per week, not per day. That's $100 per month invested into SCHD. That's currently yielding around 3.4, 3.5%. The expected annual dividend amount increase, now this could be anywhere from 5% to 10% to 12%. But going off the last 10 or so years, let's go with 11%. Expected annual share price appreciation, again, these are all just estimated. Who knows what's going to happen in the future? Maybe SCHD will go up 10%, 20% one year. Maybe it'll go down 10% one year. These are all just estimations, sort of based off of the historical numbers. Now, this is going to be invested for 30 years with this situation, this scenario, and DRIP is going to be turned on. So dividend reinvestment is going to be turned on, and all the dividends that we receive over the years are going to be repurchasing even more shares of SCHD. Now, the numbers are in, but keep in mind, this is going to be a 30-year time horizon. So year number one, the $1,000 investment is going to earn around $35 in dividends, but along with the annual contribution of $1,200 plus reinvesting those dividends, we're already up to $2,200, $2,300 by year two. Now by year number five, we're almost to $6,700 and almost $310 per year in dividends, which again is moving at a nice decent pace, but it's not really until year number 10, 15, until things really start to ramp up. Year number 10, starting with $1,000, you're already up to $17,000 plus dollars with over $1,000 per year in dividends. Now by year number 15, just going off of the numbers that we talked about, $35K and almost $3,200 per year in dividends. So by year number 15, 16, 17, that's where the power of compounding really kicks in. And that's where the yield on cost also is going to get massive because of those dividend increases and because of you reinvesting into more shares of this. These are where the numbers at least potentially could get big. So by year number 20, we're at $72,000 with almost $9,200 per year in dividends. By year number 25, $162,000 with almost $29,000 per year in dividends. Yes, just a $1,000 portfolio and $100 per month into SCHD, just based off of some previous numbers, again, all estimated, could potentially get you a portfolio that's worth over $150K after 25 years. Now I get it, maybe you're saying, well, 25 years, that's a long time. But keep in mind, we're not working with much here, we're working with $1,000. So my main goal for this video was to showcase how a tiny amount invested could potentially still be worth it, at least in the long run. Now by year number 30, after 30 years invested, like I said, I promised you, you're probably not going to become a multi-millionaire, although I definitely hope we all do. But after 30 years invested, we're talking $551,000 of ending principal and around $100,000 per year in dividends. Now again, SCHD or any other dividend growth ETF, for the future performance, who knows what's going to happen? Maybe dividends are going to get cut. Maybe dividends will double. Neither you and I know what's going to happen for sure. But the reality is that the power of compound interest does take place. And if you reinvest the dividends that your investment is paying you, over time, you're going to see the graph really start to curl up. So now that we talked about, I actually showed you guys in real life math of just $100 per month into SCHD could potentially turn into hundreds of thousands of dollars. I lastly, most importantly, want to hear from you guys down below. As far as a solid foundational position, whether it's a stock, ETF, whatever the case might be, what's a ticker symbol that you buy consistently? Leave it in my comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.